Right, so good morning, everyone. So this is the DPA 602 Advanced Auditing. And today I'm your guest lecturer, and the focus is going to be in IT audit. And I asked Yvonne to send you guys some reference material before the class. And there's a short case, a data analytic case on finding fraud. I'm not sure if we will have enough time to cover that, but I will send out the answer sheet, a step-by-step answer sheet for you guys to review, because I don't think that it's worth your time if I just hold your hand through a Power BI. That's not the purpose. It's more important for you to learn what IT audit is about and how to tackle IT or technology type of questions for the CPA exam. Okay, so a little bit information about me. Let me see, let me get my slide rolling. So that's me. The picture is taken about 15 years ago. I was doing an audit, the oil for milk program audit. So I was there, they were tearing down the Saddam Hussein sign, and I just found it interesting just to pose in front of one of those signs. It was an interesting time. I was a consultant for that did a lot of IT audit or compliance audit over the world. I was in Japan, in New Zealand, in Australia, in many different countries. And I finally decided to settle down in Canada. And I got my PhD in Canada. And from McMaster. So I have a PhD in accounting and information system, and I'm a certified PMP. It's a project management professional, and CISA is the certified information system auditor, and CISSP is certified information system security professional. So as you can see, my credential is mostly on IT audit or security audit. And that's the type of job that I did for a long time. Okay, so I actually started out in the accounting path, but back then there was more demand for IS auditor when I started out, because IS auditing back then, it's a very, very unique and new field, and very, very few people can do that. Today is still the same thing. There are still huge demand for IT audit or information system audit. And quite interesting that something that you guys may not know is that the IS auditors or IT auditors, they are usually not computer guys. Because computer guys, they are not trained to be an auditor. They don't know how to design an audit. They don't know what procedures to go through. They don't know how to follow a standard and how the quote-unquote assurance would work in the client setting. So usually IT auditors, they are trained from the accountants, and I'm kind of the type of guy who started out as an accounting guy, but my boss told me that we don't need any more accountants to go do IS audit, and that has defined my career ever. So you can email me, and that's my email. It's very easy. It's tianli@sanfranciscostateuniversity.edu. Okay, so I've been here in San Francisco for 3 years, and what you see on the news is real. Yeah, there are looting in San Francisco right now. The downtown San Francisco, all the stores, it's all like the glasses are broken. People go in there, take everything out of the store. It's true. And even in the place that I live is relatively safe. That it's a town called Walnut Creek, and we still have that. And there's a big unrest here in San Francisco, and probably all over America too. All right, so I do have, hold on, let me see, it's not working. You can contact me. I answer to my phone line or text. Okay, that's my phone number. And it's 415-644-TIEN. It's very easy. And if you want to contact me to my virtual office, you can also do that. It's San Francisco State University.zoom.us/MYTINLE. you can arrange a Zoom meeting with me. And usually I help students with the career planning issues. So I've been trying to extend my help to Canadian students as well. If you want to find a career in United States, if you want to pursue a US CPA on top of CA, you can always contact me, and that will help you to get, if you have a CA already, I can help you transfer it over or evaluate your transcript to see if you can take US CPA exams instead of Canadian CPA exams, and then you can practice in the United States. And the reason why I said that, because the Canadian CPA, they are quite well respected in the United States. The training of Canadian CPA and United States CPA are entirely different. The Canadian CPA focus a lot on critical thinking. They train students to think like an accountant, while the US CPA is more procedural. You just have to pass 4 exams or multiple choices. There's no writing part of the US CPA exam. It's a lot easier. It's not like Canadian CPA exam. I would consider probably one of the most difficult professional exam out there. Okay. So for today's agenda, we're going to talk first about the CPA exam, okay, and the competency map. Then we will get into the institute expectation of you when it comes to IT by looking at the IT competencies in the competency map. And we will get into a general strategy, how to answer those case questions. And then we will get into look deeper into the risk management and IT risk management aspect. Then we'll talk about IT controls, and we will wrap it up with how to prepare yourself for the CPA exam. Okay. So the CPA exam, the Chartered Professional Accountant exam. Okay. So the CPA exam is what we know as a competency-based exam. Okay. So the key word here is competency. So let's take a guess here. What's the word competency mean to you? Try to answer it. If unmute yourself, answer it. Let's try to be interactive. It would be easier if we interact with each other. So what do you think the word competent or competency mean in this scenario? Try to think about it. That probably implies, let's say you can do something, right? That you are capable of doing something, right? So what it means that you are competent, you are capable, you are able to carry out certain tasks. So what the institute is basically saying that the candidate need to demonstrate evidence through assigned tasks, okay, that he or she is capable of performing the task with the required level of competency. Okay. So all in all, what it really is saying, a competency-based exam, is that if you pass the exam, you are as good as a practicing CPA. That's what a competency-based exam means, right? So that, with this understanding, then we know that the competency map is extremely important, because it basically defines, right, what you need to perform at what level. Okay, and each year the institute will update the exam and the competency map to guide the candidate. And the competency map, how many of you have seen the competency map or read the competency map? If you do, please raise your hand. Okay, good. So the competency map, most of you have not seen it, so let's just pull it up to see what does it look like. Just give me a second here. Yes? Okay, hold on for a sec. All right, let me admit that person. All right, so usually how many participants are in the class? Do you guys know? Right over here on this window, you can see this is the Chartered Professional Accountant Competency Map. And in this document, it basically lists what you as a candidate have to perform, right? If you scroll down this document, you will see different areas, okay, of tasks that you need to perform. And probably the most important part is starting from section 5, right? It tells you, like for example, the competencies in financial reporting, what you need to do. You need to evaluate the financial reporting needs. Okay, you need to be able to evaluate the appropriateness of the basis of financial reporting. You need to evaluate report system, data requirements, and business process to support reliable financial reporting. Basically, what it is saying from this competency map is the source of your skills as a CPA. Okay, what it's saying that as a CPA, as a practicing CPA, as a competent CPA, you need to do these sort of things. Okay, let me get this table out. You need to perform those tests at a certain level, and if you pass those levels, right, and that means you are a competent CPA. You are just as good as a practicing CPA next door. Okay, so it has published detailed requirements of competencies, and their requirement level are listed in this document. This is a tremendous useful information to all candidates, because it basically is the source of those questions, case questions we're coming from, right? If you are talking about revenue recognition, you have to take a look at that. Oh, for revenue recognitions, I need to perform at what level, okay? Or for different type of questions like IT related questions, what type of level do I have to perform, or what kind of questions that would appear on the questions. You can find them all in this competency map. Okay, so what you should do is you should try to benchmark yourself against the institute's requirement from time to time. After a while, you practice, okay, your accounting case questions. You should always review this competency map. See if you understand those competencies, if you're comfortable with what the institute is asking you, right? And that's a very good way to gauge your own level at passing the CPA exam. Okay, so when it comes to IT, okay, the institute expectation of IT level or technology requirement for an accountant is scattered everywhere, right? So for example, when it comes to financial reporting needs and system, the institute says that the candidate should be able to explain implications of current trend, emerging issues, and technologies in financial reporting, right? What are being used? What are the new technology out there? What are the problems? What are the trends? Okay, are we using cloud to manage accounting records? If so, what are the potential issues? Okay, if we, sorry, my headphones loose. Right. Okay, whether there are some emerging issues, like for example, using cryptocurrencies for transactions. Okay, how do we report those things? It may be on the exam. So as an auditor, as an accountant, how do you respond to that? Okay. For governance, right, the institute is expecting that a candidate should be able to explain the implications of current trend, and issues and technology in strategy and governance. Okay. For strategic implementation, they want you to be able to analyze key operational issues. Okay. For example, the use of informational assets and their alignment with the strategy. Okay. And for enterprise risk management, the institute expects that the candidate should be able to assess the impact of IT or IS risk on enterprise risk management and recommend appropriate risk management strategies. So basically what it's saying is that ask the candidate to be able to evaluate a new strategy, a situation, like for example, merger and acquisition or purchase a new technology, right? And the candidate should be able to assess the impact and then to communicate, right, to the stakeholder what are the potential issues involved. Okay? And in terms of management reporting needs and systems, the candidate should be able to document and assess the business process, system, and data requirements and recommend improvements to meet information needs. Or for if you are focused on assurance, right, the candidate should be able to identify ethical and privacy issues related to the information technology and its use. So you may be able to see a case questions that certain company exploring issues, right, to see if they are able to use a private information in order to expand their market. If that's the case, right, as an auditor, as a candidate, right, how do you respond to a situation like that? How do you write to the stakeholder? That's what the institute is trying to is expecting. There are even more. It's not there. Okay. So when it comes to internal control, the institute expects that the candidate should be able to evaluate the information system, include the related processes using knowledge of data requirements and risk exposure. Okay. And when it comes to internal, external audit requirements, the institute wants you to explain the implication of current trend, emerging issues of technology in assurance standard and methodologies. So for now, let's see this thing here, emerging issues and technology in assurance, or current trend has popping up over and over and over. What the institute is basically saying that they want you to keep yourself updated, right? To always on the lookout for, what is changing, what is causing changing in this current situation. Like a couple of years ago, the big problem was climate change, and and there are more and more disaster recovery services that's needed. So for the US CPA as an example, there are suddenly a request from the institute that we need the faculty member to address climate change issues, how it affects accounting, right? There will be more services needed for forensic accounting to rebuild record. For example, the entire city in California, you guys probably know the Paradise City went out in Gulf. The wildfire just completely engulfed that city. So there are business there, and there are, as long as there are business records, right? And how do we reconstruct those business records? How does business like that can survive natural disasters like that, right? And continue to perform as a business, right? Those are examples of current issues or trends, right? That as a candidate should know about, okay? And then there are more issues on internal audit projects and the external the assurance engagement. I think that for the rest, you should be able to read it yourself. And I did actually provide this document to you. And what I want you to do is read through it yourself, right? And as you can see here, right, the data analytic part start popping up. Develop appropriate procedures, including audit data analytic, ADA, based on identified risk or material misstatement, or to prepare or interpret information and report to the stakeholder using data visualization where appropriate. You see, these are just the newer items popping up, right? So you see, from the institute perspective, it's just 2 line items here, right? But then we can expect there are questions of data analytic because it is listed in the competency map, and in the competency map, it will list what level of competency the candidate should perform at. Okay, right, and then there are valuation issues, right, to apply appropriate method to estimate the value of a business or estimate the value of an intangible asset. And these 2 things we're going to talk about later. Valuation for IT asset or technology is very, very difficult when it comes to intangible assets. And we'll go through some ways to try to establish the value in order to establish control to protect those assets. Right. So we just gone through some of those competency map questions. I know it's very hard to understand what it's really talking about. So let's try to take a look at real question, a real case exam questions to see what a question might look like at the end of the day. All right. Let me put this up here. Okay, so this is a 2010 School of Accountancy, the final exam questions. It's a big case questions. So the exam is in 5 hours in length and consists of 1 questions only. So it's a comp question, right? So there are 21 pages including this one. So just like those exam questions, they will give you some background information on this company, right? They give you a list of exhibits, right? Exhibit 1, background information on Quest, and give you the overall business plan, the company's impact analysis, the customer of this company, the business expansion team, right? Just some background information. Then goes to Exhibit 2. Okay. Information in Exhibit 2 give you the information pertaining to potential acquisitions of DNI. So, okay, there's an issue here, the acquisition, right? And now it looks to us that this company, Quest, is going to purchase another company called DNI. And then they give you some background information of the acquisition target over here, the background on DNI. Can you guys see it? Do you want me to blow it out a little bit? Are you guys able to see the text? Not, eh? Okay. Let me try to blow it up. Nah, I can't. Right, but then I guess I'll read it later. So there's some more information exhibit. It goes on and on with some numbers here. And based on what you've seen so far for case questions, you know that there's a bunch of analysis you have to do for these exhibits. It goes to now Exhibit 6. Then Exhibit 6 start getting interesting. So let me just read it to you. So Exhibit 6, so this is probably one of their last exhibit, the technical documentation for Casper. Summary of Casper. It says Casper is a real-time server replication service capable of invoking a backup server within 10 seconds. DNI has developed replication software to continuously replicate server data over virtual private network, VPN, connections to a special router. The special router then distributes the information to backup servers located at the DNI facilities. In other words, the DNI server are constantly connected to its client servers through VPN to capture data and monitor for any disruptions due to a natural business disaster, a power outage, a system crash, or loss of critical business applications. Should one be identified, the data transmission is immediately transferred to the DNI backup servers. Okay? Regular routers have been reconfigured to support multiple client networks at the same time. Critical tasks performed by the technology software determine any server status functionality, function normally or not functioning with 99% accuracy and automatically initiate the required action upon server failure, produce a service disruption log on a daily basis. And on the router side, each router is capable of supporting up to 50 different customer networks while maintaining secure boundaries between DNI's network and the customers. Each router is capable of responding in less than 10 seconds, and routers are capable of differentiating DNI's network users and are capable to direct the correct users to the correct server. And the backup servers are available 24 hours a day, 7 days a week, and have sufficient space to handle the possibility that all current clients have server failure at the same time. Okay, and it goes on to the next page, shows you a map, the technical documentations for Casper's, how the Casper software work in relation to the Casper routers, and how the clients are served. So these are the technical documents, right? But what is really asking is over here. Let me see. Okay, from the first page, right? First page is basically usually tell you what is required. Over here at the last paragraph, it says that DNI's value is primarily derived from their internally developed technology, Casper. Andrew has provided some preliminary technical documentation with what we just saw, the Exhibit 6. I want you to review the documentation and identify some key objectives and tests for Quest IT staff to perform in order to verify the functionality of this technology. Please address each of my requests in the report so I will use when I presenting the board next week. So what do we have here? It's a let me see my clicker. Okay. First thing you have to understand is that the institute is never shy throwing technical jargons at the candidate, because it says very clearly from the competency map, they want you to keep track of current trend, emerging technology. So you see, this was a question back in 2010. They were talking about things like server replications or uninterrupted servers and VPN, all this and that, right? But while in the same time you're thinking, you're sitting there, I'm just an accounting student. I'm not an IT guy. Why are you asking this kind of questions, right? I'm just like, so a lot of times students start panicking. No, I don't know. I didn't learn any of this. Well, how am I supposed to answer, right? And in the exam situations, right, a lot of times what people think, okay, I'll just set it aside and not worry about it for now. Okay, but the competency-based exam is a type of exam that if a critical questions that is there identified in one of the exhibits, right? Because if you see that questions, they only have 6 exhibits there, and one of them dedicated to this IT part, and then you did not answer it, okay? And from the marker's perspective, if you intentionally left out a big chunk, okay, of your exam, right, that you did not answer, that means you did not meet any competency requirement in that area. You will not be able to pass the exam that way, okay? For example, if the questions were asking, there are area of merger and acquisition, there are area of tax questions, there are area of financing questions. You can't just skip that financing part, okay? Oh, I don't know about financing part, I'm not gonna do it, but I did so well, right? In the merger and acquisition part, I should be fine. No, a competency-based exam doesn't work that way. Okay, so if the question in the IT is there, and there is a requirement competence that say competency level B, okay, that basically means that you are able to analyze the questions and apply your knowledge to answer it, right? Are you able to reach that? Okay, so first we know the institute is never shy throwing technical jargon at the candidates, and then, okay, Your worst strategy would be, we just go over it, right? Panic. Let's say I'll deal with that later, or I'll just write some BS just to fill the space. But understand that when in CPA exam, that they have actually issued to every exam markers a simple guidelines what the candidate need to answer. So if you just write a bunch of BS, actually doesn't help at all because they will not get marked. Okay, your better strategy is probably try to understand what the question is really asking. Okay, by reading through that, what do you really want? Okay, when it comes to what the question is really asking, the real question, I think it's probably easier to describe this in a picture, right? And so I'll do it this way. Okay. So you guys know this, right? WWJD. Do you guys know WWJD? What would Jesus do? Right? Okay. So in CPA exam, in case exam, what it's asking is this, right? WWAD. What would accountant do? What would an auditor do in this situation? So you see, what the institute want, okay, the institute knows that you are not an IT guy. They know. They know that you are not an IT guy. You are just an accountant, and you are a candidate who's on the cusp of being a practicing accountant, right? And on top of that, the institute is not interested in training nor testing you as an IT professional, okay? So you are not required, right, to just say, oh, I have to pick up some server book, I pick up some programming book. No, because the institute is not interested in that, okay? And also, your case exam will not be marked by IT guys who knows computer. No, your exam are actually marked by other practicing CPAs. Okay, they can over the summer they can take some of the this type of part-time job, perhaps for every question they grade, they can get some money, but they are actually CPAs, right? Okay, they are not computer guys either. Okay, so what they want is indeed to test you to see, are you able to answer those questions? Are you able to do those things as a practice CPA, right? So what is really asking is indeed WWAD. What would accountants do, right? What would a competent, a practicing accountant do in a similar situation, okay? So you don't need to think, oh, I have to learn a new set of knowledge, okay? I have to learn all this and that, I have to learn server, I have to learn VPN, no, okay? So you may think, right, oh, I don't know those things, I don't know VPN. So what would an accountant do? Right, the logical thing with an accountant to do when in an audit situation is that, well, I don't have the required knowledge. I don't know what to do. I can't provide the service to my client because I'm not qualified to do that. So if you are not qualified to do this audit, if you're not qualified to perform this task, what should you do as an accountant or as an auditor? Well, it's straightforward, right? I have to hire professionals. I have to hire outside experts, right? But if that's the case, right, and what procedures do you do to hire outside accountants, outside experts, right? What do you do in order to maintain their independence, right? If assurance need to be provided, if attestation need to be provided, how do we ensure the experts that we hire can perform the job independently, right? Or have the required knowledge to perform it, or have certain listed agreed upon tasks that both the client and us and the third-party consultant can perform, right? So that's actually what the institute really is asking. As an accountant, what would you do? It's not trying to force you to answer something that you are not trained for, you are not qualified for, right? That's not the issue here, right? So if you're trying to write BS and try to do a bunch of things that you are not trained for, you won't even get a mark in that area, because that's not what the institute wants you to do. Okay, so if we were to think about a general strategy when we approach this type of questions, right? And I would try to say it this way. Okay. There's something wrong with my clicker. Okay, first, okay, you should be able to recognize the issue. What's the issue is that, right? Okay, by reading the case questions, okay, there's an issue about technology, okay, oh, there's issues about revenue recognition, or there are issues about bad debt or aging accounts, or there's some issues listed in the cases. You have to recognize them. Once the issue is recognized, okay, you need to be able to select a treatment. Maybe it's an accounting treatment, maybe it's a technology treatment, okay? Maybe it's a treatment that to implement a different control, right? And then the third one is to communicate to the stakeholders. How do you organize your writing, right? And write to the role that you assigned and communicate to the relevant stakeholder in a sensible way. Okay, so the general strategy when it comes to questions is indeed just the green part. Are you able to recognize the issue? Okay, are you able to select a treatment, and how would you communicate to the stakeholder? Okay, and this type of structure, it even apply to the data analytic kind of questions, right? The data analytic questions like I gave you, are you able to recognize the potential fraud from the data set, right? And how are you going to extract the evidence? Okay, how are you going to treat the data so evidence can pop up? And how you're going to use visualizations or table to communicate your evidence to the stakeholder, okay? So for the CPN exam, the general strategy does not change. It always follows this type of setup. Are you able to recognize, okay, there are issues buried in the case, whether it's technology, whether it's accounting, whether it's lack of control, okay? Are you able to select a treatment for it? And then are you able to communicate to the stakeholder, right? And now over here, sometimes if you want to reach a higher competency level, right? Not only you need to recognize the issue, you probably need to evaluate the risk in terms of the impact, okay? Or in terms of materiality, right? Okay? In terms of like a likelihood of occurrence. And after that, you select the treatment. And sometimes, okay, after you select the treatment, not only you have to recommend the treatment, sometimes you may have to implement the control, right? But the implement control part, usually do not happen to the assurance type of questions because you have to maintain independence. You cannot actually be the one to implement control, right? But it really depends on your role and the situation. And then, okay, you then communicate to the stakeholder. So this general strategy here is very, very important, right? It basically gives you a structure guide. See how you're going to structure your thinking, right? Think always, am I able to recognize the issue? Right? Because if the issue is not recognized, you won't even have the treatment and you can't even write, okay? So it's always think, what's the issue here? What's the question? What's the problem? Okay. And then thinking to select treatment and how do you communicate to the stakeholder? Okay. So first, when it comes to reading the case, to recognize the issues, right? There are several strategies. You have to think, then what is the engagement, right? Whether this engagement, okay, is an audit type of engagement, is a consulting type of engagement, What type of engagement are you doing, right? The engagement type determines the role the auditor should perform. Okay, so if it is an attestation type of project, then you know that you have to give an audit opinion in the end, right? Okay, so then you know that you have to perform this job with the independence requirement, right? So that also means that you should stay within the scope of this engagement. You should not breach outside of it. So if you are performing attestation, okay, and then there's an issue about IT fraud, right? And then was like, oh, you start writing, oh, we should implement access control mechanism in the company, right? And then you completely blew it because now you breach your independent requirement. You are recommending management solutions. You are trying to implement control, right? When you are doing attestation, that would never work, okay? So you have to think, what's the scope of my engagement? Don't get distracted by those issues, okay? Right? Then think, what is your role in this engagement? Pardon me? Okay, let me admit this person. Hold on. Oh. All right. Okay. So because I'm in United States, right? So I'm not sure about the audit or the audio or video quality. Are you able to, guys, are able to read the text on the slides? Okay. But anyway, that this lecture is simultaneously casted to YouTube. It has a much better quality on YouTube. I've seen it. It's actually streamed in full HD. So if you want to review the material, you can always go to YouTube. All right. So that's just some alternative you can do. Right. Okay. So next thing, what is your role? First, we figure out what's the engagement, right? We try to read the case, find out, okay, we are doing this type of engagement. Then you find what's your role within the engagement. Are you performing an internal role or external role? Okay. Then, because by doing this, you'll be able to figure out who are you talking to, who are you writing to, right? Okay. Sometimes you can see whether you are performing a consulting role, okay, or your role need to be independent, right? And then you can start looking at what are the risks, the source of the risks, the potential impact of the risk. Maybe it's financial, so it may mislead the shareholder in what way, right? Okay. So by breaching at what number, right, it may mislead the shareholder, okay? Or by doing certain things or not doing certain things, it may lead to misleading the shareholder, right? So these are the things that we can do when we start reading the case, try to recognize the issue. Always start with understanding what's the engagement and what is your role in the engagement, okay? And then we go into the second stage, select the treatment. When it comes to selecting treatment, first thing we think about is what would be your approach to resolve this issue, right? Maybe, okay, the issue is we need to initiate an audit, right? We need to start a special engagement, right? Or we need to maybe see the issue is out of scope, but significant. Like, for example, the earlier we talked about, when you're doing an attestation or when you're doing a regular compliance audit, right? You found there are red herring for fraud, okay? You found there are some indications, right? A certain manager is on the take, right? This is outside your scope of your audit, but significant, right? You probably noticed that a computer is missing, right? It's out of scope of your audit, but it's significant. How are you going to approach it, right? That's the idea. So this treatment, how do you treat the issue that you find, right? That would be like this. Would you need a special engagement? Right? Usually that's the case, right? If this issue is out of scope but significant, you will always propose a special engagement. This is actually in the audit industry. You know, it's kind of an industry secret. Okay, so we all know that you should not perform things out of the scope, right? But the real reason is that you always try to upsell the service, right? Okay, I found something that's an indication of fraud, and then you recommend, okay, let's start a special engagement. Let's start another service, so you can continue to bill the client to get more of your service out of the door. Then, how would you, if it is a need for the special engagement, you start to think, what standard would you use in order to initiate the special engagement, right? How would you execute that special engagement, or how do you maintain the performance standard for that special engagement? Okay, then we think about what standard to use. In this case, the CSAE 3531, direct engagement to report on compliance, could be one of them. Okay, we need to comply to certain security standard. We need to comply to certain control procedures, right? Or it can be the section 9100 special engagement reports on results of applying specified audit procedures, right? This usually the special engagement, the standard that one have to use if you were to hire outside experts, right? IT experts. You will specify that how do we do the independence? How do we make sure and check, right? The level of knowledge of that expert, right? How do we initiate a contract with that experts? They are all here, right? In this standard. So it's not like I'll say, oh, okay, we don't know the standards, so let's just hire an outside expert to do that, right? A practicing accountant, a competent accountant should be able to understand. It's not as easy as just pick up the phone and call some outside experts. We need to verify that person's expertise. We need to have a contract going. We need to make sure that the outside expert is indeed independent, right? There's no conflict of interest with us or with the client, right? We need a way to properly initiate this special engagement, right? That would complete this the requirement, right? The level of competency that institute is asking for. Then when it comes to writing the case, the general strategy when it comes to writing the case or communicate to the stakeholder, first you start with the design structure. Okay, structure your writing with a framework, a scaffolding per se, right, to guide your thinking process. All right, I guess most of you at this point of time when it comes to advanced auditing, you already learned about the RAMP structure, right? What is the RAMP structure? Risk, approach, materiality, what's a P? Procedure, right? So it is a structure of audit planning structure. So for you to help you to guide your writing, guide your thinking, a framework of it, help you think, right? But in addition to that, right, next thing is start with an outline. Right? Look at it from a bird's eye view. Okay, these are the things that I want to write about. The outline, outline it. Like almost like a document with the just outline with no sentence in it. Once you have the outline ready, you look at the outline. Okay, yeah, this is good. This is something that I can do. And you start filling the blanks, right? Once you have the structure. Okay. Then the second one is the actual writing part. Now you have the structure, but what do you write in it? That comes when what we call it define your toolkit. What do you want? Do you have the right tool for the job? is what I'm asking. Right? Earlier we talked about revenue recognition. Do you have the right tool for the job when it comes to testing revenue recognition? Do you have the right tool for the job when it comes to merger and acquisition? Do you have the right tool for the job when it comes to IT security, fraud? Okay. Do you know what to write? Right? Do you know what to look for? Right? Okay. So, for example, what is your tool? Right? That I know. Okay, when it comes to writing fraud, I have to expect the motive, opportunity, and method, things like that, right? Those are the tools that you can go for. Okay. So the third tip when it comes to writing, it's kind of like it really works, right? But it's kind of out there, out of the box kind of thinking. Okay, it is something like call it make your own cookie cutter, right? You probably noticed that the answer to the assurance case questions usually follows certain very, very repetitive sentence style, right? When you talk about like financing, the financing type of question always write this way. When you talk about control, right, it always follows a certain way. Okay, so almost as if that you can practice those sentences, right, over and over to get your muscle memory in there. So if you want to write about RAMP, you already know what are the sentences are in your head. Okay, you just keep typing it, changing the variable, changing the company name, changing the numbers, and you are there, right? Try that. Okay, that's part of your toolkit, part of your cookie cutter. You're already familiar with the sentence enough. So when you are writing the CPA exam, right, you are not worrying about the language. You're familiar with the language. You practice on your finger, you practice reading it, you practice reading it out loud, you practice typing it over and over. You know what the sentences are. You don't need to construct the sentence to make it look good, sound good. You don't need to do that anymore, right? And that's what I mean, those cookie cutters. Just make yourself like comfortable enough in describing or communicating in the way a practicing accountant would do. Okay, and those sentences usually repeat itself over and over. They look very, very similar, right? Okay, so let's take a break and we'll come back. We'll get into the IT part of things. Now we finished the general strategy. The purpose of the first general strategy part is to let you understand that what you're trying to do is to apply, okay, your strategy, what you understand as an accountant to IT type of questions, right? It's not you trying to make yourself become an IT guy. No, right? Okay. So once you understand those general strategies, right, are you able to put yourself in an IT questions and react like an accountant to identify the issues, select the treatment, and communicate to the stakeholder? That's what the first part is about, right? To assuage your fear and to assuage your, like, for example, the uneasiness when you're looking at unfamiliar questions. Okay, so let's take a 10-minute break. Come back 10 minutes later. It's only 7 o'clock here in West Coast, so I haven't had coffee or breakfast yet. So give me about 10 minutes or so, and I'll be back. Is that all right? Okay, let me put some music on for you guys. Can you guys hear the music? Is there music on? No? Sorry. Let me turn the music on.
Mhm.
All right, let's come back to class. All right, let's give a few minutes, make sure the people are back. All right. Right, let's get to the second part of our lecture. Really get into the IT aspect. So let's think about the assurance and the assurance of accounting information for a second. First, let's start with the idea of what is assurance. Okay, how do you answer these questions? What is assurance? So let me pick one of you guys. Let me get William. William, can you hear me? Yeah. Oh, I have a hard time hearing you. Okay, let me find another person. How about Michael? Michael Sherb, are you able to hear me? Michael? Michael, are you able to hear me? Huh. Oh, it looks like I have a hard time hearing you guys. Okay, that's fine. So let's all think about this for a second. What is assurance? How do we define this word? Because you see, at the end of the day, this is our job as an auditor, is to provide assurance. Okay, so we really need to understand the meaning of assurance. But when it comes to financial audit, right, we understand that the word assurance means to provide a reasonable level of competence, right? That the information contained in the financial statement are free from error due to either intentional manipulation or unintentional mistake. Okay, that's what we mean by assurance. The key word here really is that we want to be able to provide a reasonable level of competence on something. So when it comes to accounting information system, right? Okay, according to CAS, it provides this long list of the definition of AI accounting information system. We don't need to know, right? What you need to know is here. The accounting information is used to identify, analyze, measure, record, summarize, and communicate relevant economic information to authorized parties. That's what the accounting system is doing. Okay, so we use computers to collect information, right? To process those informations, right? Then to print it out or to output those information to relevant parties. So for the assurance of accounting information system become the concept that how do we make sure this information is doing its job? How do we provide a reasonable level of competence, right? That the accounting information is doing the right thing, right? So can the accounting information able to identify, analyze, measure, record, summarize, and communicate the relevant accounting information to the stakeholders correctly, right? So in that respect, so then we understand that the accounting information controls the input, the process, and output part of accounting information. In order to provide assurance, then we need to check, okay, the input. We need to check the processing part. We need to check the output part, right? So this provides you a general guideline. When you're looking at an IT type of questions, first thing you think about it, okay, oh, we're dealing with the collection of information, or we're dealing with the processing, calculation, summarizing, analyzing informations, or are we dealing with the output part, right? Or generate report or filing taxes from the existing accounting information, right? And the auditing part of this IT system is to make sure these input, process, and output part are working appropriately, are working what it's supposed to do. Okay, so therefore, in assurance of accounting information, the auditor's role is to ensure a reasonable level of confidence of that system handles the collection, the processing, and the presentation part of the accounting information to the stakeholders, right? That's as it is, right? That's what the assurance of IT or assurance of AIS mean. Okay, so how do we identify these issues in AIS then? Now, in principle, we understand the AIS does the input, process, and output part, and how do we identify the issue? It's actually quite easy, right? If we understand what information is, try to understand it. First, we take a look at the input and process and output part. We understand that it can also be interpreted as the data and the logic and the presentation. So data represent the raw unprocessed data, right? It's just a collection of information. And the logic represent the processing element. It turns data into information, okay? And then the presentation represent the final output. It turns information into knowledge, okay? And use this principle, if we apply that to accounting information, okay? We know that the data represent the transactions as recorded in the journal entries and in the master file, the raw transactions, right? Just all the journal entries, okay, between HR, right, and sorry about that. Okay, between the data, between the HR and let's say the employees, or between a service department, right? And into to the vendors or to the customers, okay? The collection of raw entries. Okay? And so the logic represents the principle, the framework, standard policy guideline, and procedures to structure the data in a systematic and logic manner, such as IFRS or GAAP. What IFRS or GAAP does is just turn those raw transactions and process in a way, okay, that will fit this standard, right? So the logic, the smaller logic, it can be that say, just give me a weekly summary of all the transactions, right? There's certain logic, more complicated logic is okay, calculate the bonus for a certain employee, or more complicated logic would be to calculate the way, okay, how do we file taxes, right? Okay, to turn the raw transactions into tax filing. Okay, so at the end of the day, right, the data is still the same. It's all the raw transactions that the company have to handle, right? And the logic usually represents how do we touch the data, how do we handle the data, right? How do we change the data, okay, to fit the stakeholders' need, right? So in the end, we turn these data after it's processed, we present it to, okay, in the form of financial reports or relevant notes, or earlier we talked about, we may turn those transactions into tax filings. We may turn those transactions into a, let's say, the bonus schedule. We may turn these raw transactions into, okay, like some kind of like a depreciation schedule, right? It can be many things, right? So from this perspective, then we know, okay, there's our general principles should be applied to how this data, logic, and presentation should work. And from your perspective, you start think, if I were an accountant, right, when it comes to collection of data, okay, there are certain principles I want to make sure that the data is collected. Okay, there should not be error contained, right? We should keep it confidential. Should not be revealed to the party that not supposed to know. Okay, so that's what we are looking at here. The general principle of accounting informations. When it comes to data, the principle is what we call the CIA principle. Okay. The CIA stands for the confidentiality, integrity, and availability of data. Okay. The confidentiality basically just means that the information is only available to the people who not only have the need to know, but also have the right to know. Okay, so you have a trove of accounting transactions, right, between your customers and your company, right, like in the form of credit card data, right, order dates, quantity, shipping dates, customer name, all that, right? So we know, okay, those data have to be kept confidential, right? How about integrity? What does that mean, integrity? Okay, it's a very interesting concept. You learn audit the assurance. You should understand that the integrity means that what, right? Somebody is or something that's free from undue influences. Right? You can't change it. You cannot say today the number is 100 and tomorrow I look at it, it's 102. No, right? Once the data is recorded, right, it should be free from undue influences to change. Right? So from the accounting information perspective, exactly the same way, right? Is the system able to maintain the integrity of the data, right? Is the system able to maintain the confidentiality of the data? And the third part is the availability of it, right? Okay, availability is just like the word. Look, is the data available when you need it, right? Let's say I want to process this data, okay, and it is available there for me, right? So from this perspective, when I talk about it, it seems very easy. Yeah, the data is right there, but it's actually harder very, very difficult to implement. If you think about it, if you keep the data in the computer, right? Are you able to guarantee me that the data will always be there? Right? Let's take Google as an example. How far will Google go to ensure that the gmail.com, when you type it in the computer, will always show up, right? What kind of equipment does Google have to invest in order to ensure that high availability of that service, right? Same thing apply to you. If you put your accounting data in the computer, how far would you go to make sure that the data is always available when you need it, right? Do you need a backup? Okay. Do you need uninterrupted power supply, right? Do you need to make sure that if your primary office is on fire, that you can still resume work at somewhere else, right? Or if your data is destroyed by fire, by flood, or by anything else, are you able to make sure that you can still carry on critical processing in your company, right? So that's the part of availability. So in these three things, like, okay, now we have a better idea. When we look at the issues, we want to identify issues. Okay, I have a certain framework to think about. Okay, I want to think whether this data is the data part, the input part or process part, or the output part. If it's the data part, oh, I know, I understand that I should apply these three principles, the CIA principle, into the task, right? So I understand what I'm looking at, whether this is a confidentiality problem, whether it's an integrity problem, whether it's an availability problem, then I can think about the treatment for it. Oh, if it is availability issues, I want to think about whether that the company, right, can continue to perform, continue to provide a service, right, continue to function as a business, right, to provide a high availability or high integrity, right? Okay. So the second part that you probably know, we talk about the logic. And when it comes to logic, we know logic, okay, means that we are changing the data somehow. We are performing some kind of a logic operation to the data. So we are changing the raw transactions in the very, very raw data form into information, whether it's summarizing the data, okay? Okay, whether it's, let's say, oh, just give me a weekly sales, okay, whether it's to calculate the bonus for a certain person, whether it's to calculate depreciation, right? These are all logics, right? We are changing the data in a certain way, right? So if we are going to do that, then what kind of principle should we uphold, okay? And the principle is here, what we call the AAA principle, is the authorization, authentication, and accounting. Okay. The accounting here is what it means is actually the audit trail, right? So let's think, if we are going to change the data in the system, right? Now you have a database with the raw accounting transactions, right? Then you're using this data to calculate someone's salary, right? To make sure that this person is getting paid, right? Okay. And then logically you think, right? Oh, who can touch that data? Who can change that data, right? That person must be authorized to do that, right? That person must be authenticated that this is indeed the HR manager, right? This is indeed the person who has the right to change the data. And not only that, we want to make sure whenever the data is changed, the data is processed, it leaves an audit trail, right? So when the data go through certain logic to be processed, to be changed, okay, these are the principles we have to uphold. The authorization implies the level of access. The authentication implies the right to access, and the accounting implies the leaving an audit trail. So it says here, as you can see, the raw data is protected per the confidentiality requirement, right? After this data, the CIA principle over here we talk about, right? We know that the data is protected, right? But the business logic, okay, at this point is available to all whom possesses intelligence. So let's say if I have a set of data, the sales data for every sales agent, right? It's there. Okay, it's protected. It's okay. But the problem is that whoever can change this data, okay, without authorization, without authentication, then they can do certain things to the data, right? To find out, to give this person a raise without authorization, or to masquerade as the HR manager to do certain things to the data, and without accounting or audit trail. The problem is that we don't know who did it, who changed it. Okay, so that's the principle for when it handles the logic, the AAA principle. Okay. The third one is the presentation. And when it's come to presenting the information after it's processed, the principle we have to go is what we call the RRA principle. It concerns with the relevance, reliability, and accessibility of the presentation. Okay, whether this data presented are relevant to the stakeholder or not. Okay, whether the data, the report that printed is reliable. The reliability here means that, okay, say if you process the data today, and then it give you, say, bonus at $120 based on the same data, right? Okay, when you next time you run the same equation using the same data, will the system give you the same number, $120 bonus, right? And that's what it's referring to. Whether when it comes to output the data, will the data output reliably? Okay, when it using the same source of the data, okay, and then whether the data are accessible, okay, to the people who need it. Right? So these are the three parts here. Okay, so now you have your first IT audit toolkit. We know the data, when it comes to input, it's a CIA principle. We want to make sure the data is have confidentiality, integrity, and availability, okay, element in it. And when it comes to logic or processing the accounting information, we want to make sure the authorization, the authentication, okay, and the audit trail or the accounting part, right, is in there. Okay, when it comes to presentation or the output information, we want to make sure it's relevant, reliable, and accessible. Okay, so with all these three things, right, I really want you to take time to think about this and memorize this. So in case writing, if you are able to apply your knowledge to write the issues, okay, if you observe the input issues and you mention the CIA principle, or you mentioned when you're looking at the, let's say, a processing part of AIS, you mentioned the AAA principle, that will give you at least a proficiency level C or B, right? It's really good. Okay, you are able to demonstrate knowledge, and you are able to analyze the problem, and you are able to draw a logical conclusion in routine situation. And that's basically a level B proficiency level. Okay, so now, okay, this is what I called, earlier we said toolkit, right? Okay. So you try to remember the CIA, AAA, or RRA, right? And you'd be surprised, right? Even people who work in the industry for a long time, they still don't get this down, because you see, this type of things is, you usually don't get it unless you worked in the industry for quite a while, because it doesn't really teach in the textbook, right? So it's kind of interesting, right? So the next part then we're going to talk about is the risk management part, right? To analyze and understand risk. Okay, so the general principle of risk management, okay, is the process to assess risk, to analyze its potential impact, and then reduce to an acceptable level and implement the right mechanism to maintain, to control the risk at that level, right? So if you think about it, right, if we were to assess the risk of, let's say, wildfire, right, and then the wildfires, the risk of wildfire to your business operation, okay, then first thing we'll probably think about is what are the potential impact of that wildfire, right? It may destroy all our data, right? It may destroy our processing capability, okay? Okay, so how do we reduce this risk, reduce the impact of this risk? How do we maintain the risk at that level? One may think about, this risk of wildfire is too great. Let's just move to another location. I will avoid this risk altogether, or I will buy a fire insurance, right? Okay, to transfer this risk to another party, right? So when it comes to risk management, the CAS, right, has its own way of looking when it comes to risk. Okay, the CAS, the Canadian auditing standard, says when it comes to risk management, one should first identify the business risk relevant to financial reporting objectives, right? And estimate the significance of that risk. And the third is to assess the likelihood of their occurrence and potential impact, and then deciding about the action to address this risk. Okay, if you look at this CAS, the risk assessment process, and you think back to the earlier structure we talked about, it's very, very similar. First, it's talking about, are you able to identify the issue over here? identify business risks relevant to the financial reporting objective. It basically means, are you able to identify the issues at hand? Okay, and then the estimate the significance of the risk. Okay, the CAS is telling you that are you able to see this is a significant risk or not a significant risk, the severity of it, right? Are you able to determine, to assess the likelihood of this risk, and then are you able to decide or propose implication, the implementation or controls to address those risks? Okay. So when it comes to the risk management procedures, right? The CAS specified that when it comes to the risk management procedure, first thing you should do is for increase of the management, ask the management, right? So, for example, if the management is thinking about investing in a new ERP system, right? A complicated ERP system that you don't know, as an accountant, you know, okay, it's a complicated new accounting system that very few people are trained, right? We don't really know what's it about, right? So we need to first inquire the management, ask the management about it, right? And then we perform the analytical procedures to analyze, right? How much of the impact would that be? And then we perform the either observation or inspections, like me in the very first picture. That's what I did. I performed an on-site inspection of the oil for milk program to see if the milk powder is indeed milk powder. You know, that's basically what I did over there, to test the purity of the milk powder and to see if the oil that you used to exchange for the milk is indeed at a certain quality. It's quite interesting. It's a very boring job, but okay. Okay, but then earlier we talk about here, right? The risk management process. Okay, the second part is to estimate the significance of the risk, right? Okay, and this part, the significance of the risk, is actually quite important when it comes to your CPA exam. Okay, because the CPA exam in all case questions, right, the single most important evaluation criteria is your ability to identify a significant risk. Okay, they're all in company exams. There always will be a significant risk buried in the exam somewhere, right? It does not matter whether it relates to IT or not, right? The important part is you are able to recognize that there's a significant risk inside the case, okay? If it is related to IT, what do? And then think whether it is about the input, whether it's about the process, or whether it's about the output, and go from there, right? Because if this is something that designated as a significant risk, you have to address it in the case. You have to address it in your writing. You cannot abandon, okay, a case questions without addressing, okay, the significant risk. And CAS do have their definition of what constitutes a significant risk. First is fraud. Okay, in our case, if the fraud is related to IS or IT, it's definitely a significant risk. Whether it relates to recent significant economic, accounting, or other development. Like for example, right, if there is recent a big development of the cryptocurrency, right? There's suddenly there's a report of a huge fraud being committed using cryptocurrencies, right? And you find out that this company, right, is doing its transaction using this cryptocurrencies. Then you should understand this is indeed a significant risk, right? Because it's related to this current, recent significant economic event, right? Whether it's or other development, right? Like in our place, right, in San Francisco, like every year there's wildfire. Like last year, the wildfire destroyed the entire city, and the year before, right, the wildfire shut down our campus for 3 weeks. For 3 weeks, we couldn't go to school. The smoke was so bad right? It's actually deemed a health hazard to go to school, and so for 3 weeks we didn't go. It's quite interesting, right? And the next one is what we call the complexity of the transaction, whether it's a black box processing that nobody knows what's going on, right? Whether the computer processes data in such an opaque way that nobody can go inside to inspect the completeness of the transaction or the procedure of the transaction, then it will be considered as a significant risk. Okay, whether it is a significant transaction with related parties, okay, whether it is it's a subjectivity to the management uncertainties, or whether the transaction is outside a normal course of business, right? If these situation qualifies, if you find any of these situations, then you should know they constitute a significant risk in CAS perspective, and you will have to address it in your case writing. Okay, so if we were talking about the treatment of a significant risk, once it's identified, we can give them the treatment of it, right? So, and identify and assess the risk that, if in the auditor's judgment, requires special audit considerations, right? That may require what we call first the substantive testing. You go through substantive procedures, probably take a sample, check the entire accounting process, whether all the procedures are done, right? Okay, may require use of independent professionals, like earlier we talked about, right? May require additional engagement if sufficient control are not in place. So these are usually the common treatment of significant risk. And when it comes to significant IT risk, okay, usually the first, the second or third one will apply, right? Because if it is significant IT risk, okay, chances are the audit team will not be able to perform any substantive testing, okay? It must be used by, let's say, a higher independent professional, or start an all new engagement altogether in order to control this significant risk. Okay. Okay. So after we talk about this, the general risk, right? Now let's move our lens, move our eyes to more specific, let's say, the IT risk part. Okay. When we talk about IT risk, the IT risk is a bit different than traditional, let's say, common financial risk or other type of risk. IT risk is defined in a way that it's actually a function of the likelihood of a given threat agent exercising a particular potential vulnerability and resulting in impact that that adverse event would adversely affect the organization, right? So the element here are the threat agent and the vulnerability, okay, and the exercise of that vulnerability, okay. So when it comes to IT risk management, we have to think about it is the process allow the IT manager to balance the operation and economic cost. So when it comes to IT risk management, we have to think about what is the value, okay, of the IT asset. What's the things that we are trying to protect, okay, in order to apply, right, a control on it. It's very different than, let's say, other type of, when we talk about financial risk, because in financial risk, it's fairly easy to determine the value of the asset that we're trying to protect, right? But in IT risk, the problem is that we are not necessarily sure, right, what is the value of that IT asset there, because a lot of times it's considered as a soft asset, an intangible asset. Let's say, for example, Google, right? Let's use Google as an example. If we inspect Google's book, right, we will see a lot of servers, equipment on Google's financial statement, right? And then because they are hardware, so we will know they depreciate year after year at a certain number, right? But is that value, those value of the server, representative of actual value of the information that is inside the server? No, right? What is really valuable to Google is not the hardware itself, it's the information that reside inside those servers. Okay, so it's very similar to any other organizations. Yes, you have computer equipment, right? And you have a certain intangible assets, right? But the value of those intangible assets, it's not on the computer, it's not on the hardware, but it's actually the information inside the hardware. So when we're talking about IT risk, or when we're thinking about the protecting the soft asset or informational asset, we have to think very, very differently, right? So to look at it visually, right? To understand IT risk, you look at it this way, okay? Visually is if a threat agent gives rise to threat, and the threat exploits certain vulnerabilities in your organizations, which will lead to risk, okay? And risk, like, so for example, risk like fire, risk of theft, okay, risk of security breach, right? And all this risk can lead to damage to certain asset, right? And the damage to asset cause an exposure that can be countermanded or countermeasured by implementing a safeguard. And in safeguard here is synonymous to control. And this safeguard control directly affect the threat agent's ability to exercise, okay, its ability to exercise threat through the vulnerability in the organization, right? So the word vulnerability or threat or risk and exposure are often used to represent the same thing, even though they have very different meaning and relationship to each other. So for you, when it comes to writing the cases, you make sure that you have to understand the definitions of these words quite carefully, right? So vulnerability means the absence or weakness of a safeguard that could be exploited. Like, for example, if your company's computer do not have let's say, a password system to ask people to enter the password, or the password is entered as 1234, or it does not require, let's say, a biometric devices, then we know that's a potential vulnerability. The absence of a control, the absence of a weakness of a safeguard, right? It's not able to do its job. You are the system make your company vulnerable, right? And then threat is explained as any potential danger to information or the system. The threat agent is the entity that take advantage of that vulnerability, okay? And most of the time, the threat agent can be seen as hacker, or internal threat agents could be a disgruntled employee, all right? Or sometimes is a careless employee is a threat agent as well, because being careless, they were leaving their computer, leaving their laptop, leaving their cell phone anywhere for people to pick it up, right? So okay. In that case, those careless employees are seen as a threat agent as well, right? Okay. Then risk is the likelihood that the threat agent taking advantage of a vulnerability and the corresponding business impact. Okay. Exposure is defined as the instance of being exposed to losses from the threat agent, like financial exposure, right? A certain law, like for example, it may be like described in the dollar amount, the exposure, the single event, the cost and the exposure of $5,000, $500,000 that can be calculated. Okay. Then countermeasure or safeguard. Okay, that's something that you put into place to mitigate the potential risk. Okay. So from doing this, looking at this map, earlier we look at it over here. Okay. Now you have a very good toolkit you can use when you're writing the IT risk type of questions, cookie cutter sentence we talk about, right? So the cookie cutter sentence for IT risk usually look like this. The absence or weakness of certain control represent a vulnerability in something, right, which expose the firm to the threat of, therefore increase the risk of business exposure in. To mitigate this risk, a safeguard of something is recommended to mitigate that impact, right? So things like this, a cookie cutter sentence, you can just keep typing it, memorize it, and all you need to do is just apply case information into these cookie cutters, right? Maybe it's talking about password protection, maybe it's talking about access control, maybe it's talking about the there's no the Wi-Fi is not protected. Maybe it's talking about, right, the server room is not locked. There can be many things, right? But if you understand this, over here, this map, then you can pretty much identify and pinpoint where the issue is at, okay? And write from that using this cookie cutter to write it, okay? That would really help you when you're trying to address the IT risk or IT audit type of question, okay? Okay. Oh, sorry. So earlier we talked about the general, the CAS way of risk management process. And IT risk management process is actually very similar, right? Earlier we talked about when it comes to risk management process, right? The first thing we know is the identification of risk, right? Then we talk about assessing the impact. And then we talk about the mitigation effort or treatment, right? And the IT risk, the pattern is almost exactly the same, right? So first we do is to identify the threat. What is the actual threat here, right? Then we assess the vulnerability. What is our weakness? Why are we vulnerable, right, to this particular threat? Then we perform the impact analysis. And this impact analysis, right, they are usually coupled with the materiality analysis. And I will explain to you why. Okay. So earlier we think about it when it comes to information asset or IT asset. We understand a very important concept that the IT asset or informational asset, sometimes the value that we know, the value on the book, does not show us the full picture, right? So based on what you learned so far in thinking about materiality, right? We always use materiality to say, okay, materiality 5% of income or net income or 1% of total asset, right? But then if you think about in case like Google, right? If the server, the value of the server does not represent the full picture, okay, of the value of that information, are we still able to establish the materiality level? We can't, because it becomes very difficult because the book value does not tell us the full picture. It's difficult for us, right, to find a number in the book, right, that will tell us, that will help us to determine that materiality level. So in that case, how do we understand? To what extent, right, a change or breach, okay, or a certain server out of service, right? To what extent would it change the company's underlying economic condition? We don't know, right? But if you think about it, what the materiality level, what it's really doing is that, right? If a certain number goes above this level, that means that
the investors, the number is significant enough to change the investor's decision. Right? That's what materiality means. This number is material enough to cause change in the company's economic condition. Right? So when it comes to risk, right? Not only IT risk, not only we have to think about the traditional materiality aspect, we really have to think the impact analysis. What is the true impact of this above and beyond just the materiality level? Okay, so then by doing this, we have to really establish the value of the intangible asset. Okay, we have to think about the impact on the firm's ability to generate future income. Right? Then the next one is we think about the treatment of such risk, whether it's to accept this risk, to transfer risk, to mitigate this risk, or to avoid this risk together. And the last one is to implement control and safeguard. Right? Okay. So if you understand the general risk management approach that we put out very, very earlier on over here, the 5.1, right? 5.1 risk assessment process is identify business risk relevant to financial reporting objective, estimate the significance of the risk, assessing the likelihood of their occurrence and potential impact, and deciding about what action to take. You really can apply this, right, to IT risks, right? Because as you can see here, the way of IT risk process are in essence very, very similar, right? It's just that if you write it to this way, okay, that will make your case writing look a lot better because you are using the right vernacular, right words to describe the IT risks, okay, instead of just using the general, risk management framework on IT risks, right? Okay, so next, let's talk about some of the threat sources. Right? A lot of times when we think about threat sources, the first thing we come to mind is hacker, right? But in case writings or in accounting, threat sources can come from many, many things. And the first one is actually natural threats: floods, earthquake, tornado, landslide, avalanche, electric storms, any other such events, right? They can be a threat. Okay. And then the next one is the human threat. Okay. Events that are either enabled or caused by human being. That's what we call the human threat. That would be maybe be intentional, deliberate, or unintentional, right? Okay. And then it's the environmental threat. The long-term power failure, pollutions, chemicals, and liquid leaks. Okay, this is quite important because a lot of times that when we try to identify the threat or identify the risk, we forget that the risk to financial reporting or risk to information systems are above and beyond just human. Okay. The natural threat and environment threat also account for a large part of it. And there's a graph here that I provide. It's vulnerability and threat pairs. Okay, you can look at it yourself. And let's take a break here and come back again in 10 minutes. And we will get into the impact analysis because the impact analysis is going to take quite a while to analyze. And let's do that in the third hour. Okay, so what time is it over there? 11? It's 11 in over there, right? They're 3 hours ahead of me. Okay, so let's come back. Okay, 11:05. Is that okay? Yeah, I'll see you guys in 11:05. So.
Hello, let's come back to class.
I cannot hear you guys at all. There's something wrong with my system. Right. Never mind. Okay. So to continue the earlier topic, so when it comes to risk, the impact analysis, the impact from a threat or threat agent. Okay. Usually there are two approaches to do that. We look at it from, it can be either the qualitative impact or quantitative approach. So the qualitative impact analysis, it's usually subjective. Okay, it's difficult to perform. The cost-benefit analysis, it's difficult to design or assign a subjective measure to it, right? And the standards are usually not available, okay, for qualitative type of impact. It's good or bad, right? It's difficult to determine, right? And then the quantitative ones, the calculations are usually more complex, right? You need to gather more detailed information about the environment in order to come up a quantitative number or quantitative measure, right? Okay. And you also, standard for that is also not available, even though you are dealing with numbers directly, right? So this, I prepared a little chart for you. You can take a look to compare the impact analysis using the quantitative approach or qualitative approach. But what you should know is that when you're trying to establish impact, when it comes to IT, earlier we established that the value to the IT asset a lot of times can be very difficult to determine, right? So if you only take a quantitative approach, may not be sufficient. Unlike other accounting questions, usually the quantitative impact can easily be seen, but for IT type of impact, you may need to take a qualitative approach as well. Right? Right. So we've been talking about the value of information and the IT asset quite a bit. Right. Okay. So how do we determine that? Because you see, we need to understand the value of that IT asset or even the value of the information in order to determine how much protection we should apply to that asset, right? So the value of the information become very important in this respect, right? First, let's think about the measuring instrument. How do we measure it? Okay. Do we measure it with the historical value? Right. So let's keep using the server as an example. Okay. So if we bought 10 servers, okay, each at $50,000, very high-end computer servers. Okay, so we bought it like 3 years ago. We expect to use it for 10 years, right, with a residual value of 0. So we can calculate pretty much every year the server is gonna depreciate by 1/10 of its original historical value. So when measuring the historical value, the time, the price we paid, when we purchased it, or the current book value after depreciation, right? Okay, or current market value, right? If we were to sell it on a market, how much would that be, right? Or we can take a look at the replacement value, all right? If this server is, is not good anymore, how much would it cost to replace these servers, right? But take a look at these four, right? Are they good enough to consider as for the information asset? It's probably not good enough, right? Because none of these can serve as approximation to the information that's contained in that server. None of them. They only talk about the hardware part. Okay, all these numbers we can see, we can get from somewhere else, right? Either from the book or from the trading market, or go on internet to search how much would the server be, right? All these four, I like that, right? But when we start looking at more numbers in reference to that,
we start get a better picture. If we start to think about what work was required to develop this information asset, or in order to develop the patent, right? Oh, we put out so much work, right? Okay, this server, right? Not only this server is a hardware, there's actually software reside on the server. The algorithm reside on the server to help us execute search, right? It is not the server that matters, it's the software on the server, right? That enable Google to perform all this search, right? Okay, so in that respect, we started thinking about what work was required in order to make it to work, right? Oh, we spent 10 years developing it, right? And that may be a better measuring instrument than these four, right? Okay. And we make it think from this way as well. You know, what would the competitor pay for it? It's actually a very interesting way to measure the value of those informational assets. Why? Because let's say if you have something, you develop something that you spend perhaps $10 on it, but let's say this is very new technology, right? That's no one but you thought about it, right? And now this is people see things. Oh, this is the best thing since sliced bread, right? Like, so the competitor may pay a lot of money in order to get a hands on this technology, right? So if you think, well, let's just take cars as an example. If you have a classic car that your grandfather bought 60 years ago, right? He never drove it. It was in the garage. The historical value of that car is probably $3,000 back then, right? Okay, and you didn't put much work into that car, right? It's just some things like that. But now you know, right? Thieves or competitors, right? They probably would pay a lot of money for that car because our car is so rare, right? It's very, very similar to the situation that you may not have put into a lot of effort into an information asset, but the competitor may see it as something very valuable, right? So you say, back to that car example. So it says a 3,000 very old car. You know, I'll just pay $10 insurance on it. I don't need much, right? I shouldn't spend too much money protecting it, right? And that's a big problem, right? Because if you can only spend $10 to protect the car, and the competitor are willing, or the thief are willing to spend a lot more money or a resource in order to steal that car, now that's not good enough. The $10 alarm is not going to work. So the situation here is telling us if the competitors are seeing your information value as something very, very, very valuable, right? A lot more valuable than you see it, right? You may need to use this as a guideline, right? To determine how much protection that you should put, right, for this particular information asset. And you may need to think, is what damage would result if it were lost or destroyed, right? If this informational asset or is this server or is this processing system would not work anymore. Like for example, a lot of times now we know nowadays, let's say Amazon, right? Amazon has only how many websites? One, right? Just Amazon.com to sell those goods, right? So if the website would just stop working, right? If Amazon.com domain name would get hacked, right, by a group of hackers or whatnot, right? Then people cannot get to Amazon.com, right? So for every 1 day that, or even actually you can calculate 2 per minute, I think. For every minute Amazon.com domain name doesn't work, right? Or Amazon.com, the website doesn't work, right? Okay, they will lose the sales to, let's say, X amount of dollar. So by that measure, you can actually calculate how much, right?
the value would that be if the server or if the technology is not available, right? And then the next one you may think about is what liability could be ensued. Right? So if it's certain things that a certain technology, right, would to cause a huge liability, for example, the Tesla's autopilot system, right? If it would to not work, what kind of liability would it cause? Right? People may start class action lawsuit because wow, the door wouldn't open, right? The car will keep driving into the ramp or something like that, right? So because this asset, this software asset, or this intangible asset may cause huge liability, right? So we may need to spend more effort, more money, right, to protect it, right? We may need to consider more effort, right, into the implementing control over it, right? So it's not just these four here, the historical value, book value, market value, or replacement value anymore. Now you have more to measure the potential value in order to determine how much protection, right, how much control, right, you want to put forth for that particular IT asset. So you can take a look at this here to reflect what we talked about earlier, right? The cost to acquire, develop, replace the asset, the cost to maintain and protect the asset, or value of that IT asset to owners or to the user, or value of that IT asset to adversaries, right? You think of that value of that intellectual property that went into developing that information. Well, you can think about the operational and production activity affected if the asset is unavailable, and even think about the liability issues. You can think about the usefulness and the role of the asset in the organization. So by going through these things, right, now you have a more way to think about to establish the value of these assets to help you, right, in your writing, or to help you justify why certain things are important, why certain things are material to firms' underlying economic condition, right? So the Amazon may be an extreme example. Everybody know that, a sane person will think if the Amazon website stopped working, that would be material to Amazon's operation. But a lot of times when it comes to smaller IT assets, right, we're not able to see that because we are not used to think in that way, right? We're still thinking about in terms of what's the value on the book, right? What's the value? Okay, the historical value. Oh, what's the market value, right? That's not enough. We really have to think in terms of these, right, in order to really establish the right value of that IT asset. Okay. After that, we can start thinking about, right, the potential loss potential of it if the asset is not available, right, or if the intangible asset is stolen or whatnot. Okay, we can still think about maybe it's a loss of the physical asset itself, or loss of the critical processing capability, okay, or loss of productivity, or delayed loss, the potential future liabilities, right? So, so when we deal with the traditional accounting questions, we look at this, the loss of asset, right? But we rarely think about these three here, the loss of critical processing capability, or loss of productivity, or maybe delayed loss, right? But these three things here, they are especially important when you're dealing with IT issues, right? Because the IT issues, they are protected in the computer, right? Loss of asset is usually very, very last concern, right? It's very, very unlikely that your server or your IT equipment are so not protected that people can go in there, right, to take out your entire server, put it onto a truck, and then drive away. It's usually not the case. And usually the case are these. Okay, they are damaged in certain ways, that the company are not able to process, not able to harm their productivity, or that change or that loss of that IT asset cause a delayed loss in the future. Right? It's a very good example. A few months ago here, happened in the United States. I don't know, you guys don't have a Target anymore there, right? Target went away, right? A few years ago, Target went to Canada, right, and didn't do well, and then they left. So it happened to Target here. So what happened is the Target POS system, the point of sale system, they went offline. Okay, the Target's POS system went offline for the entire weekend. So you see, it's just this, the hardware is still there, right? The POS system, the scanner, everything is there. So what happened is the software stopped working, right? And that caused the loss of the critical processing capability, which further caused the what? Okay, they are unable to even take in income, right? So that's usually and people start thinking about how do we make sure, right, the availability of the software asset to continue collect data, right? Because you think about the POS system, right? The POS system is actually a machine to capture accounting data. Why? You put a piece of bread on it. What data does it capture? The item number, the price, right? And then output out the inventory count. Okay, one item out. So it's actually just capturing some data into the accounting information system. So can this system be available? If it is not available, then we do not have a critical processing capability. We can't even sell things. That's exactly what happened to Target over here. You know, the POS system is so integrated, they can't even accept cash because the till wouldn't open. It's quite screwed up. After that, the Target went into start thinking, you know, oh man, we can't do this. We can't have things so integrated so well. So we have like two big items to talk about after this, and the first one is control. Okay, so we've been talking about identifying the risks, managing the risk to identify the issue. We also talk about the treatment of these issues. And so the last thing that we need to talk about is what are the controls there that we can implement? What is control? What are the safeguards? So first, what is control? As defined by SEC, control are a specific set of policies, procedures, and activities designed to meet an objective, right? So I want this company to reach 500,000 sales target, right? Okay, that's my objective. So I set specific policies, procedures, guidelines, or activities to reach that, okay? So that, by definition for the SEC, is a control. I want certain things to do certain ways. I do not want outsider to have the ability to get on my website. Okay, therefore I set a control. I do not want people get on my computer if they don't know my password. So I set up an access control, right? So that's what a control really is, right? So to read it into it, okay, the definition is that the process designed, implemented, and maintained by A, those charged with governance, or B, management, and C, other person, to provide a reasonable assurance about A, the reliability of financial reporting, or effectiveness or efficiency of operations, or safeguard asset, and D, compliance with applicable laws and regulations. So when you talk about control, the simple way of looking at it is just a policy. So bad things wouldn't happen, right? But if you want to write
in a way that is acceptable by the CPA Institute, to be graded well by the exam marker, right? You really need to think about it. We need to design the process that implement and maintained by those charged with the governance, okay, management, or other personnel, right? In order to achieve these set of objectives, right? Okay, so you see, the thing here, right, is that when you're writing for the CPA exam, right, you really have to determine the level of detail that you want to get into, right? You can go as easy as this, or you can go either write in the plain language. Several years ago, when I was still in Canada, right, the ICAO actually issued a guideline to exam markers, right, or to candidates. They stop using shorthands, right, like IMHO. People actually start using that in CPA exams. IMHO, right, AS, AFIK, as far as I know, things like that. Don't. Never use shorthand language. Right, ICO actually said that, come out with a statement, say, stop using shorthand language. So it is completely in your control how much detail you want to write into your cases. You can write something as simple as this, or you can get into the detail like this, right? But don't force yourself, but at least do not go as bad as like use plain English and write in shorthand. Don't do that. Write in the professional way, right? Write as close to the standard as possible, right? But because we all know that the CPA exam, the Canadian CPA exam, is an open book exam, right? You have access to CCA handbook, and you have access to the textbook as well, right? So if you want to find certain paragraph in the standard, you can, okay? But the problem is that if you don't know what you're looking for, you will never find it. The CCA handbook is so big, right? If you don't know that you're looking for, right, the SR 9100, right, in order to deal with a special engagement, you don't even know where to look for, right? Okay. So when it comes to controls, the first we need to take a look is the component of control, and that the best source of that is COSO, the the Commission of the internal control framework when it comes to governing the public traded company, right? So it defines that the component of internal controls, right, are the control environment, the control objectives with respect to the input process outputs, or the control activities in turn with respect to the plan, do, check, act part of control, right? Okay, control activities, like for example, you plan a control, right? The control, the actual doing part of the control, right? Checking if the control is working, and act on the findings of the control, and then the monitor of the control and documenting of the control. When it comes to the controls, these are the 5 things. So logically we look at first is the control environment. So what is a control environment? Control environment is, think of this way, the environment, right? It's the place that we are at, or the environment. Oh, it's the place that we live in, the environment. So control environment is very similar. It's the environment that controls living, right? So you have several controls, policies for HR people to do certain things, okay? And you have controls and policies that accountants should not accept bribes, right? And you have certain controls that, salespeople should not give out aggressive quotes. Okay, those are controls, right? And the control environment are the controls that live in
right? So basically it is that, how well the environment can perform, can enable those control to function. And understanding the control environment is really, really important. It's a must item for every accounting case exam. You will see control environment question every time. It will be there. I guarantee you. Okay, let's do it this way. Let's take a bet, right? You guys, when are you guys going to take the CPA exam? Do you know? In a year? Within a year? Within a year, right? Okay, let's say within a year. Okay, so I'm willing to take a bet with you guys. Right. So if you did not see any control environment questions, tell me, and I'll give you $100. How's that? I'm willing to bet. Really, you will see control environment questions every time. Okay. So when it comes to control environment, so we know it's the place that the control live in, right? So it is important to understand the entity. Okay, what is this company? Okay, maybe it's the relevant industry, the regulatory and other external factors that affect the controls, or the nature of that company, their operations, their ownership and governance structure, the type of investment planning to make, or the way the entity is structured and how it is financed. Okay, and the most important when it comes to control environment is the tone from the top. Right? What the top is saying. Right? You see, a lot of times when it comes to IT stuff, right? And usually we understand, the computer is password protected, right? Okay, yeah, we have a biometric devices, we have put our thumbprint. We cannot, we cannot let people take a laptop outside the office without signing out. The rules are there. So that is the thing, the controls are there. But the problem is the control environment. What's the tone from the top? How's the company's operations like? Because you can have those controls in place, but if you do not have a good control environment, those controls will not function, right? So the control environment is actually the big concern for IT controls. Why? Because management are prone to override the controls. Most of the time when I was doing IT audit, the biggest problem is always the management. Why? Because the CEOs or CFOs, the people on the top, right? They never try to remember their password. They will write it down somewhere, right? They flip the keyboard, it's their password right down there, right? They will give the password to their secretary, right? And they will override the control. Okay, no, I need administrator privilege because I'm the CEO. So they start putting a bunch of the program on their computer. They download viruses they don't know because they are willing to override the control. And a lot of times that the tone from the top that by doing that they are not being careful, and people start to perceive it that way. We don't need to be careful. The IT guys, and so what, they just don't care. Okay, so when it comes to controls, IT controls, security controls, access controls, always take a look at the control environment. Are those controls living in a safe place, a good place for them to live, to grow, to function? No, that's what control environments are. Okay, but they understand that the control environment itself is not a safeguard. You cannot just have a good control environment. We are a very ethical person. Our managements are very good, right? Okay, but you can't have that good control environment. But if there's no safeguards there, there's no safeguard. But you cannot say that, our management are very ethical, right? They don't do bad things, so we don't need to lock our computer. We don't need the password on our computer. Is that true? No, you can't, right? Safeguards or controls still need to be in place, right? But the problem is that without a good control environment, the control will not function as planned, right? Okay. So understand that the control environment in itself does not prevent or detect or correct
a material misstatement. It does not. What it does is just allow the controls to function as planned. Okay. So also a satisfactory control environment is not, we already talked about, an absolute deterrent of fraud. However, it is the environment where control can be planned, designed, implemented, and monitored. So a good control environment is crucial, right, to the wellness of how the controls can perform. Something wrong with my thing. It's not. Oh, okay, good. Huh. It stopped working. Hold on. Right, good. It's come back. Right. And just as the control environment is commonly tested, right, management bias is a part of the kind of questions that come to related to control environment as well. It's also very commonly tested, right? Because when it comes to management bias, what is basically going to saying is that the active management who has their own way of doing things, it's a very strong leader, right, may have their own bias, may force the employee, or may force the internal controller, internal auditors, to not report, their findings, right? So even the independent board of directors, right, they can influence the operation somehow, but if the management can override those policies, right, have a certain bias in financial reporting, right, they may cause a big problem, right? So what you have seen here is that you have to train yourself when you read a case to see these red herrings, right? So if you're talking about in a case, you're talking about like management doing certain things, right? The top management, right, is doing certain things and it's not encouraging, or it's doing, trying to have a strong opinion, right, in how certain computers should behave in certain ways, or how financial reporting should be done, or how certain processes should be skipped, then we know that it's a control environment problem, particularly a management bias issue, right? So when you start writing, right, you start to get by this point at our third hour, you start to get a sense, it's not really about IT at all. It's what we are applying, what we know, onto IT, right? So even though the subject matter is IT, is computers, is something that we don't fully understand, right? But what we can understand is the part, right, of management bias, a control environment issue, right? No, it's an issue of not being able to establish the value, right? So the same principle really apply, right? It's not about the computer itself, right? It's not about the technology, it's about how an auditor, how an accountant deal with the technology issues, right? So that's good? Yeah. So similar issues when you talk about smaller entities, right? It's very similar to the management bias, right? Smaller entities has becoming more and more frequently tested nowadays, right? You probably see like a few test questions based on what the classes you have taken, right? The new CPA exams start to test new candidates more on smaller entities.
instead of like give you a big company to talk about. No, smaller entities matters, right? Okay. And the problem with the small entities when it comes to this issue is because the first issues for the smaller entities is the separation of ownership and management, right? How does that work? Because if ownership and management are one, right? So that's this situation here. Those charged with the governance, right, in a small entity may not be able to have independent or outside members to have independence at all, right? Because ownership and management are one, right? I own it, I manage it, so therefore I can do whatever I want. I'm beyond anyone's control, right? That happens very, very often in smaller entities, that the auditors or the board members do not have the ability to be independent, right? So how do you deal with those things? Okay, so usually the role of governance may be undertaken directly by the owner manager, right? And the nature of the control environment may also be influence the control, okay, or the absence of the control. So if you see smaller organizations, smaller entities, you always have to think about whether ownership and management, okay, whether the governance, whether the the internal control or internal audit can still function, okay, in these entities, right? Okay, so I think we're running out of time, and I still have a few slides to go through, but I think the rest of the slide you should be able to go over yourself. And I will send Yvonne this full slides and also the documents like this that I wanted to show you guys. It's over here. PDF. This is the document I will send to Yvonne as well. Here is the implementation tool for auditors. This is not a CAS 315, but what it does is to give you common pitfalls, okay, of applying the controls. So for example here, right, the pitfall they give you here, right, the pitfall 1, component internal control, it's that the candidates usually have problem with the control environment, risk assessment, communications, and monitoring of control, and pitfall 3, pitfall 4, pitfall 5. So this document actually give you all 6 common pitfalls that candidates make, right? So then with this document, right, you can really study, how not to make mistakes. Okay? They are clearly identified in this document. I'll send that with Yvonne as well. So, okay, so before we go, can you just give me, because this is the first time I use this system, so how does the audio sound? Is it good? Good? Bad? The audio? Too loud? Is the audio good or bad? It's good? It's okay? Okay. How's the video quality? Are you able to see the tags? Is that the voice matching the video? The video quality is okay? Good. All right. Okay. So, because I can't really see my own video, as far as I know, that when you guys see it is very different than how I see it on my screen. The quality is much lower, so I'm quite concerned that people can't read it. Okay. So anyway, thank you for being here, and I will send the answer to that fraud case. Okay, and I will send this CAS 315 implementation guide and my slide, these 3 things to Yvonne, and you can review the answers and try to practice with the steps yourself. How's that? Good? Great, thank you. Bye.